Alright, now we are going to calculate 2017 and 2018 net operating working capital and 2018 free cash flow. Alright, so now I'm going to start with 2018 net operating working capital. Alright, this will be current asset minus current liability. Okay, current liability minus notes payable. In other words, current asset minus current liability plus notes payable. Okay? Oh well, some people ask me why we need to add back note payable. Okay, we add back note payable because it is interest bearing component. We only subtracting non-interest bearing component. Alright? That's the reason. And 2017. Right? And this current asset, current liability, and note payable comes from where? Where? Balance sheet. So let's go back to balance sheet. Current asset here minus current liability plus notes payable. Okay. 2017, same. Find your current asset 2017 minus current liability plus notes payable. Okay, so our delta NOWC, change in net operating working capital, will be 2018 net operating working capital minus 2017 net operating working capital. We call this delta NOWC, or change in net operating working capital. Same word. Okay? Now let's calculate 2018 free cash flow. Okay? The formula is a little bit complicated, but we already know everything, right? EBIT multiplied by 1 minus tax rate plus depreciation and amortization, right? Minus capital expenditures plus what? Delta NOWC, change in net operating working capital. I'm gonna put like this, okay? And delta NORC, change in net operating working capital, is here, right? So we need this component. This is very important component to calculate 2018 free cash flow. Okay, so before we calculate this, EBIT comes from where? Income statement. Tax rate, income statement. Depreciation and amortization comes from where? Income statement. So this first part comes from income statement. Clear? Okay, the second part, capital expenditure, where it comes from. If I provide cash flow statement, okay, cash flow statement, you can find capital expenditure, right? However, in this case, I only provide the balance sheet, right? So we can find capital expenditure in balance sheet. It's possible. And then this second part, change in net operating working capital also comes from balance sheet, right? So first part, this part, EBIT to depreciation and amortization, comes from income statement. Capital expenditure and the change in working capital, net operating working capital, comes from balance sheet. Okay, I just want to make sure that. Now let's calculate the first part. Okay, so I'm gonna write down this. FCF equals to, I'm gonna start with the EBIT multiplied by 1 minus tax rate, and then I'm gonna plus depreciation and amortization. I'm gonna start this part first. So let's go back to income statement. EBIT, right, multiplied by 1 minus tax rate equals to what? 36%, right? In this case, 0.36, right? 36% plus depreciation and amortization. Here we go. Right? Enter. And now we need to calculate this part, second part. Okay? Minus, right? This is minus. It doesn't work. So I'm gonna calculate this second part here. All right? How to calculate the capital expenditure? Capital expenditure, you need two component, net fixed asset and then depreciation and amortization. Okay? So go back to balance sheet, find the net fixed asset minus 2018 net fixed asset minus 2017 net fixed asset plus what? Plus depreciation and amortization. Okay? This will be your capital expenditure. Again, if you have a free cash flow statement, cash flow statement, sorry about it, simply you can find this number. However, we don't have it. We need to know how to find this number from balance sheet and income statement. Here we go. And this will be our capital expenditure. Now, change in net operating working capital equals to this number, right? So we need to add this to number, right? Okay. This one. This number. Just now, subtracting this to number will be our 2018 free cash flow, right? By the way, I provide solution. Thanks for watching.